All right, traders, welcome to today's webinar event. My name is Sean Kozak. I am the founder of NSTA, and I wanted to start this week's webinar topics on some of probably the most powerful trading concepts I've ever seen as a trader. I know it's a pretty bold statement, but one of the things that I like to do is I like to kind of really focus these weekly webinar events on education and strategy focus. The number one reason that you're here is to find the most efficient way to make money in the financial markets. And that's exactly what we're going to do today is we're going to give you strategies. We're going to give you the exact areas and where to take trades. We're going to show you how our traders are trading the auctions. I've got a whole bunch of live trade examples. I want to show you guys trades that students took, trades that instructors took. Because at the end of the day, if you can learn how to do this, you can right your financial ship, okay? So just a couple groundkeeping rules. We are recording the event. If you have questions, type them in the chat box. I'll get to them following the end of the event. And if I don't get to your question right away, please keep in mind, I am not ignoring you. I am simply presenting a webinar and there's a lot going through my mind and I want to make sure that I can get through the topics so that as soon as I get a chance to answer your questions, I will. If you can't stay for the entire event, rest assured, we will send you a recording and we'll be able to follow up with you with any concerns, questions, or any needs that you have so that we can help you get off to the races. So what we're going to do today is we're going to specifically focus on trading low volume liquidity in the auction. Okay. Now, as you know, there's been a lot of events we've taught in the past. And if you've been around for a while, I see a lot of familiar names in here, and I definitely see a lot of new names. But what we're going to do today is we're going to talk about trading profiles and why I think it's probably the most powerful way to trade in terms of identifying good locations. Yes, there's a lot of great indicators, but when you understand the auction, it's a game changer. Okay. So what I need to do is I need to cover a quick disclaimer because we are going to be looking at real trades. We're going to be looking at trades our students took, their live fills. We're going to look at instructor trades, live fills. So therefore, we need to cover a disclaimer. Okay. And what we're going to do is just make sure you note that I am not your advisor. I am not your broker. I am not your CTA. I am here to give you education and I'm here to provide you with resources on our products and services so that if you do trade any of these concepts or if you do place risk capital in the markets, please do so at your own discretion. Past performance never guarantees future results. Okay. So now that we got that out of the way, let's talk a little bit about this. I've got a list of topics that I feel are absolutely critical in order to give you a stand-up presentation. And the main objective here is for you to leave here today with the insight that, man, I want to trade this because this is powerful stuff, right? And you know, there's a lot of webinars that talk about, you know, pretty okay concepts, right? You know, pretty topics that are okay. You know, they're good. You know, they got some flashy bells and whistles and the nice indicators. And then there's webinars that if you understand what we're doing and you understand the power behind it, it can change your game. It can literally change the way you trade for the rest of your life. And that's a pretty serious statement. So I'm going to talk about what we're going to do in terms of an offer as a company. So right out the gates, we're going to talk to you about an offer. As you know, these are webinars. At the end of the event, we'll provide you with some resources, and should you choose to go forward with them, that is your decision. I want to get in tune with our identity as a desire, right? Everybody here has the reasons as to why we're trading, but I want to talk about why we should adapt to today's strategies, right? Like why would we want to choose these ways of trading over other ways of trading? Like that's a serious question. And we're going to get into the basics on some auction theory. So if you don't have any experience with auctions, we're going to talk about some lingo. We're going to talk a little bit about what the splits are and the patterns. And then I'm going to shift directly into strategy. Okay, I'm just going to go right into the strategy. I'm going to teach you exactly how we find our trades. I'm going to show you exactly what I look at to find the best opportunities. Then we're going to show you a whole whackload of real trades that a bunch of traders took, finding these methodologies so that you can hunt for new trades. And And it's interesting, like I've never traded Apple a day in my life, like Apple stock. And I said, why don't we just pull it up a chart of Apple? I just put a level there, and the level just got hit like literally 15, 20 minutes before the event. And it's a profitable trade, right? Like it's just blows me away that if we can just do this on any market and it's consistent, it should be able to provide you the backbone you need as a trader. Okay. Everything else outside of this can be extra additions, right? If you want to use other tools and you want to use other stuff, but if you can learn the concepts that I'm here to teach you today, it could change the way you trade. Okay. So first things first, my name is Sean, and I am one of the owners of NeuroStreet. And I'm here to deliver you with solutions. No fluff, no snake oil, no false hopes. I am not just an influencer. I am someone who's been working with traders for thousands, thousands of students, right? Like, and working with traders all around the world. And it all boils down to this. In order for me to help you, you need to learn the strategies that we're trading. You need to understand the indicators that we're using. We do have live trading rooms, and we do call these trades out in the room. So today's topics are going to be actually on some of the stuff that we do call in our trading room. You need to practice in a sim account before you go live. That's given. And then once you're ready to go live, you have the potential to scale your business. Okay. Now we have a mastermind community, and it's where a lot of our more advanced and serious traders gravitate towards, but you don't need to start there. Okay. You don't need to start there to be successful. You just need to get started. Okay. Now, the reason I know that this process works is because we have communities and we have traders that post their trades every single day. We've got threads where traders get to share their success, and you can't hide that, right? Like there's no getting away from that, right? A lot of people will trade by themselves. They have a bad day, they reset their sim account and they run away and they just shake it off. But when you start posting trades in communities where traders are actually able to see what's going on, it kind of proves itself, right? I don't need to sit here and sell it to you. We'll go into the threads and I'll show you all the user trades, and you can make the decision yourself if you want to get on board with what we're doing. Okay. So no hard sales pitch, guys, no fluff, none of that garbage. I'm here to help you become a profitable trader. Can you guys give me a yes if that makes sense? Everybody's with me? I want to know if everybody's on the same page. Give me a yes around. I want to make sure everybody's engaged. If you're watching YouTube videos, if you're listening to Mariah Carey, or if you're doing something, I don't care. Shut it off. Shut it off. If you're here, let's make money. Let's teach you how to make some money. Okay. So just a fair warning. Okay. Just a straight up fair warning. At the end of this event, I am going to pitch you an offer. Okay. We are a business. We teach traders how to make money. But I am going to give you an offer that is so irresistible, you'd literally have to be crazy not to want to take it. And I mean that with utmost respect. If you've ever seen The Godfather, Al Pacino, Vito Corleone, he says, I make you an offer you can't refuse. I'm very serious about that. We've made some substantial changes in the business that will make what we're going to do here today next to irresistible. Okay. And so just stick around, because I can assure you that you're not going to be wanting to pass up on this when we're done with the event. Okay. So plain and simple, let's sort through the noise. The only thing we all want in here is to be a financially consistent and profitable trader. That's it. Nobody wants to have all the extra stuff that they don't need. And nobody really wants to keep buying thousands and thousands of dollars of packages, okay, if you find a consistently profitable method to trade. And the reason everybody wants that is because the opportunity to scale that business is the reason you got into this business. Nobody got into trading to trade one lots or to make $100 a day. I don't care who you are. Nobody's going to spend the rest of their life trying to make $100 a day, knowing how hard this business is. So the only reason people are here is because they want to be able to become consistently profitable, so that eventually they can add zeros to those profitable days, because the potential to scale that is there, right? Instead of trading 5 contracts, you could trade 10 contracts. Instead of trading 1,000 shares, you could trade 10,000 shares. You guys get the drift. And the reason that's the only reason is because we want to be able to build a new life. Like, I'm not going to go into the hocus pocus. just going to get right down to it. The brass tacks is we want more, better things. We want better life. We want to drive a better car. We want a better, bigger house, more freedom with the family, all that stuff. But the money is the most important part. I like to strip away the garbage, guys, because everything else is just noise. So what I want to do today is I want to teach you how to find trades that can produce this type of opportunity. Okay. And in order for me to do this, okay, and this is very, very serious, okay, you need to be wanting better results. Like if you're here and you're already a successful trader, there's no point on you being here. Like there really isn't. If you're a truly highly successful trader, I don't know why you'd even be in the event. Most of you need to learn how to trust the strategy and believe in it, because you're not. You're having a hard time with it right now, right? And at the end of the day, all we're looking for is really, really clean trades that you can see in advance and you believe in, because let's face it, trading is a difficult business. If you can find a system and you can identify a strategy that is really, really, really locked down and solid, that you can say, you know what, this is simple. I get it. I understand it. I can trade that. Then I can easily manage risk around that. Because at the end of the day, all you really want to do is depend on that ability so that it produces a trade every single day. If you don't have a system that can produce opportunity on a daily basis, you do not have a business. You have an indicator. You have some phony signal that you got sold on a landing page because somebody fed you the riot act. I'm here to strip away from all that, because when you come into our trading rooms and we post our trades in our threads in our Discord channels before the room starts, and then what we do is we trade the same levels that we posted an hour before the class started, you can't get away from that, guys. That's not visual back testing. That's, here you go, traders, here's a bunch of our trades, and then the traders take them in the classroom when the classroom starts. That's a business. That's not, let's wait for the bar to close and let's hope to take a trade and let's catch a couple ticks. This is, we run a business as a trader. So there's a difference between traders and a bunch of people that are hoping to make money. And I want to take every single one of you and turn you into profitable traders if you give me an opportunity to do so. Can I get a yes that you guys are okay with me turning you into consistently profitable traders? And I'm not saying that as a marketer, I'm saying that as a trader. Can you guys give me a yes that you're willing to let go of whatever garbage is going on in your trading day and let's make a shift? Okay, because this is a serious discussion and I really take it quite seriously. We will trade in front of you. You will see us take the trades, okay, as long as you're doing what we're doing. So why would you want to consider what I'm about to teach you today? Okay, well, from a professional perspective, the method that I'm talking about was designed by institutions. It was not designed by retail traders. So what I'm about to share with you today, I'm not going to read the slide and go into all the details. I'm going to tell you straight up. The concepts that I'm teaching you today were built by institutional banks and institutional traders on the exchanges because of liquidity reasons. They built this model so that they could manage big money. And it's using statistical analysis. It's using statistics. It's got a mathematical background. It doesn't have some, let's cross this and let's wait for this and let's put a fancy little signal here and let's sell a bunch of indicators to a bunch of suckers. No, it is a mathematical strategy that is relying on volume and time. And it was built by institutions in the 80s. And it is still being used by every institution in the world right now. And I'm not saying that to try to give you the hype on, you got to buy with the institutions, buy low, sell high. No. This is straight up institutional concepts. Prop shops use it, banks use it, funds use it. They have to. They may use other things, but they're still using this as well. Okay. So why would you want to consider using this? Because this is not lagging information. This is, we plan our levels in advance. We know exactly where the trades are going to be before they happen. You know exactly where you're getting in before you get there. You know exactly where you should be taking a target before you get into the trade. You know exactly where your stop loss should be before you take the trade, which means you're not sitting there chasing the market. And you could literally do other things. You want to listen to some YouTube, you want to, talk to your wife, pet your dog, whatever the case may be, set alerts, set your levels. We set our levels in advance using this concept. and we just let the market come to us and we take the trades. Okay. It's stress-free trading. Now, I'm not saying you're going to have no stress in trading because everyone's emotional management is their own baggage, but at the end of the day, you don't have to sit there and be exhausted watching the market go up every single tick. Like that's just, you learn a little bit with experience, like as you gravitate towards different strategies, what works for some may not always work for others, but if you're consistent, that's all that anybody really cares about, right? So let's talk a little bit about comparing apples and oranges. Today, I want to talk about auctions, market profile, and volume profile. Now, an apple is an apple and an orange is an orange, but they're both considered fruit, okay? Volume profile is volume profile. It is still a profile. Market profile is a profile, but it's considered a market profile. What's the difference? One measures liquidity and one measures time. That's it. It's really that simple. You learn how to read volume and you understand how time is irrelevant to that. And the reason this is super important is because we've built an indicator that measures both of them together. Now, most platforms, most bank platforms, or most trading platforms do not have that luxury. Some will have basic volume profiles. If you're using Ninja or TradeStation or TradingView or even Sierra charts, a lot of them have like basic volume profiles. None of them have market profile, not advanced market profile. Except for maybe some profile platforms. But even at that, it's not available on the mass platforms. And the interesting thing is that we've built an indicator that combines both of them into one tool set so that we can identify how to measure time and volume against price properly. Okay. Now, when you look at an auction, you're going to have 4 components that are important. That's all you need to really pay attention to in the auction. You've got value area highs, you got value area lows, you got the point of control, and you got the entire value area. And what ends up happening is we take a profile that looks like this on the left, and that's got volume and time overlaid on top of it. And we have the ability to automatically break large distributions into singular value areas. Okay, so let me just kind of grab a cursor here for a second. Okay, I'm going to show you some things. This would be considered a full day or a week or a month, depending on the setting that you set the profile software to. Okay, and what we're doing is we're measuring liquidity. So this is the volume profile here. Okay, and this line in here is the market profile. So this is the market profile in here. Okay, the problem with that is that's the entire day's relationship. We've got high volume and we've got low volume. Very, very important things to learn. Now, what we did was we built an automatic splitting algorithm that basically takes that and turns it into this. And there's a reason for that. There's a very, very, very big reason for this, is so that we can read the volume. Okay, we can read the volume and the time relative to how the market trades in different areas. So what ended up happening is the market went sideways here. Big push up into an uptrend, consolidated, you get your pullbacks, pushed up into an uptrend, consolidated into the pullbacks. Now, what most traders don't understand is that a pullback is not what happens first. A pullback happens because there's a value area here that identifies balance in auctions. And the only reason the pullback worked in here is because that's cheap on the auction. That's cheap on the auction. Okay. So you can't see that over here all the time. And what we've been able to do is we've been able to identify how to take full distributions on volume and time and split them into individual auctions. And they say, Sean, well, I thought you said this was about to be keep it simple. Let's keep it super simple. right here is a breakdown of the only three things you ever need to learn as a profile trader. And I mean, yes, there's other things like how to see volume nodes and how to identify arbitrage and stuff like this, but none of that really matters for this discussion, because all that matters is you understand the difference between the three market scenarios. You're going to have bearish or bullish consolidation in a range, okay? And so what ends up happening is you get these D patterns, okay? And the market goes like this, okay? In a D pattern. It might go up here like that and spike down like this and spike down like that and spike like this. You get these Ds, right? Well, the reason it's doing that is because there's a value area high and a value area low for volume and time. This is considered expensive. This is considered cheap. When you have a P pattern like this, the reason this happens like this, you have a value area high, you have the range is up here. This is considered cheap. This is considered expensive. Market breaks down into a downtrend. You get the B pattern, value area high, value area low. This is considered expensive. This is considered cheap. Now, here's the thing, okay? All three of them have the same relationship. The idea is to identify what's cheap and what's expensive. So let me kind of put things into context, because I really think it's really important. If you own a restaurant, okay, you own a restaurant. Let's say you own a steakhouse, and your number one dish that you sell is steaks. Okay. Well, you as a business owner need to have a supplier to buy your food for your restaurant. You're not going to go to the supplier and say, hey, Mr. Supplier, I want to pay $20 for a steak, and then go back into your business and sell it for less, because now you're going to lose money. You need to buy the steaks for $5, turn around and cook them up onto a nice souffle, and then mark them up and sell them for $45. That's how a business makes money. Well, guess what? An institution sees over here, this is where steaks are at, $5, $3, $2. But they got to go and sell them for 20, 50, etc. And they need to be able to know how to do that so they can move large amounts of money around, not little teeny 20, 30, 50 contract garbage. Like we're talking, they need to move money around. So as a retail trader, let's always remember that we are in their house, not the other way around. We've got to shake that entitlement feeling. Nobody cares that you got up to learn how to make money today. You're in their backyard. So we need to understand what they're doing before anything that we do is going to make any sense to us. Does everybody understand this concept? So my job here today is to teach you how to look at cheap and expensive areas in the auction, but more important, teach you how to read the liquidity. Because what I want to do is we're going to strip away all this information, and I want to be buying things low, but I also want to be doing it with low volume nodes. I want to be selling things high, and I want to be doing it with low volume nodes. You say, well, why? Because low volume equals price rejection. High volume equals price attraction. The institutions can drive prices as far down as they want, but they're not going to be able to do a lot of business in low volume. So therefore, the market will reject out of low volume environments. And where do we get in? We get in where the market rejects. Where do we get out? We get out where the market is pulling the market to high volume liquidity parts. So what we're going to do is I want to walk you through a breakdown of a strategy process. Okay. This is something that we teach all the time in our trading rooms. And the first thing we do is we prep our auctions. The second thing we do is we identify where we want to take the trades. Then we look at how we're going to manage the trade. And then we rinse and repeat. That's it. Prep the auction, identify low volume nodes. Where am I getting in and where am I getting out? Log your trade. How many of you guys can learn these 4 steps? If I teach you how to set up your software, if I teach you how to set up the auction, if I teach you how to identify where the low volume levels are so that you can plan your entry and you can figure out how much you size, I can't tell you how much to trade with, I'm not your broker, but if I teach you how to use the tool properly, and if I teach you how to identify a wicked trade every single day or many, can you identify how to size your trade and get in and get out of the market? How many of you guys think you can do that? If we show you exactly where to do it and we show you exactly how to do it and why we want to do it with a whole bunch of social proof from a whole bunch of traders doing the exact same thing, can you guys learn it? I believe you can, because everybody can learn it when they see that it's being done successfully by other people. That's the question. Okay. So what we're going to do is we're going to talk a little bit about strategy focus. Okay. Right here. So the premise for this trade is that we're using 30-minute charts, not 5 minutes, not 10 minutes, not 15 minutes, not hourlies, not dailies. Don't ask me. 30-minute charts. The reason we're using 30-minute charts is because market profile was built on 30-minute time increments. Every 30 minutes, you have a 30-minute candle that counts. There's 46 TPO counts in an auction with a 23-hour session. Futures and Forex will allow that. Cryptocurrency as well, okay? And the concept here is that we want to identify the auction with low volume pockets, primarily the low volume nodes that have the biggest cliff of volume. Okay, so let me explain something what I mean by the cliff of volume, and then we're going to start talking about. Okay, we're going to start talking about this. Okay, so let's say we're going hiking. Okay, and how many of you guys been hiking before? Anybody here? Just give me a yes if you've been hiking. Okay, how many of you guys like hiking? Getting outside, stretching the legs. Hell, I think we should all go for a daily hike. We sit in front of our screens all day. It's going to kill us one of these days, right? So everybody's gone at least hiking once, right? So let's say we're going up a mountain. We get a plateau, okay? Get a little bit more mountain, okay? Okay, plateau, and then it just drops, okay? So let me just, and this is so powerful that when I taught this to everybody and they're like, oh, it makes perfect sense now. That's the whole point. I want to make sense of it for you, okay? I have no problem going here, grinding my way up, you know, drinking water. We set up camp here, cook some marshmallows, spend the night, whatever. Next day, we set up camp, boom, okay. We start coming down here, okay, boom. We set up camp up here. And then all of a sudden the next day, everybody starts walking this way and they're like, wait a second. I don't think we can go any further. And there's going to be a few people that are like, no, I can do that. I can jump off anything. I've got a parachute. And the other 50 people, besides the one guy with a parachute, are like, well, I can't go with you. You only have one parachute. Okay. What do you think everybody did? Do you think they jumped off the cliff or do you think they turned around? You tell me. Turn around. You'd have to be stupid to try to jump off a cliff without a parachute. So guess what happened? They all went back this way. And you know why? Because they could not continue. This is the exact same concept that happens reading auction volume. Give you an example. You got an auction. Cliff, you know, cliff. Drop in volume. Everybody's walking down the cliff. The market's selling off. The market's selling off. The market's selling off. The market's selling off. Wait a second. I don't have a parachute. Yikes. Whoop. And then you know what ends up happening? There'll be once in a while where everybody gets a little brave and the market does this. But you know what happens? It falls so freaking fast that you don't have to sit there and white knuckle your trade for the next hour like everybody does when they're sitting in a bad trade. Now, I hope it turns around. I really hope I don't get stopped out this time. No. If I'm in a trade, I want to be right or I want to be wrong real quick. I do not want to be sitting around messing around. I want to be doing it. I want to be in it to win it quickly and efficiently. I'd rather be proved wrong quickly than have to sit there and waste the entire morning only to get the same result. How many of you guys would agree that makes sense? If you're wrong, let the market prove you wrong. It didn't work. But if you're right, it should be right quickly and efficiently, and you should be able to do it repeatedly. How many of you guys would like that? So what we're going to do here is I'm going to show you examples of cliffs that I like to trade and cliffs that other traders like to trade. And we're going to go and we're going to look at markets. I'm going to show you how to find these trades. And I'm going to show you exactly what we do. Okay. Are you guys learning from this? I'm trying to keep it simple without trying to overwhelm everybody. If you're new to trading profiles and trading auctions, I don't think you need to complicate the discussion. I think it should be real simple. Right. So let's take a look here. Here's an example of a trade that I called in the trading room a little while back. What do you see here? Massive cliff. Right there. Massive cliff. Market came down, ripped to the upside. Okay? Let's show you another example. This is a Forex market. Pound dollar. The cliff is the dotted line. The market came down. Big cliff here. Just keep cliffing. Just kept cliffing right there. Boom. Wicked trade. Pound dollar. I could count this one here. That was a cliff. I could count this one here. That was closing the gap. That wasn't the cliff. Okay. We'll talk about which one is a cliff and which one isn't. Okay. Let's take a look at another trade. So, and I'm going to teach you how to identify current auction levels versus historical auction levels. My favorite are historical auction levels because they're the most adequate, easy to identify. This was an example of prior week, and this would be current week. Whenever we get a chance to trade prior week levels, oh baby, load up, man. Time to rock and roll because the market had stabilized in those areas. Cliff of volume, market comes up, rips down. From a day trade perspective, these are 30-minute charts. You could get huge trades or even small day trades. Okay, let's take a look at this. Here's an example. NQ hit in the overnight session. I had that level planned in advance. What ended up happening is the market came up, hit the cliff, dropped down. Okay, you say, well, what about these? What about these ones? They already worked. It was not fresh volume. This is fresh volume. Okay. Fresh auction levels. Okay. We're going to talk a little bit about how to identify fresh versus tested. Okay. Here's an example of a user trade that took the trade. Different trade, US CAD. It's a nice trade. Here's an example of another trader taking a trade. Auction level cliffs of volume. Profitable trade. Here's another trader taking this trade, base hit, day trade. Okay. Here's some posts. Matt says, here's at least one of my homework. Gilbert applied what I learned the last time in the Mastermind Futures class. Take a look right here. He mapped out the level where the cliff was. There's the cliff. Wicked trade. Erwin posted this in Discord. Massive trade off the cliff of volume. Okay. So what I want to do is I want to talk to you a little bit about how to do this. I want to show you how to do this. We're going to do it together. Take a look at this trade. This is a huge trade. Cliff of volume. Okay. So we're going to talk a little bit about what these are and how to trade them. Let's take a look at a different one. Cliff of volume. CL. That was an amazing trade. I took that trade this week. Posted it in Discord. Okay. Let's take a look at another trade here. Today's trade room. This was taken in today. I had Gilbert send me the trades today. They took this trade. in Gilbert, in the trade room, off of the trade today on the NASDAQ. This was on the NASDAQ today. This is today, right here, low volume, clip of volume. They came in. It looks like he did a confirmation entry, not a first touch entry. Either way, the cliff of volume was here. Bingo, bango. Wicked trade. It got all the way back up here. They just got out at the point of control. Still a huge trade going from 79 all the way back up to 07. It's 30 points on the NASDAQ. More than 30 points. Let's go here. Here's another trade in a Russell. This happened today. Cliff of volume right here. They just dropped the auction right in there. Huge trade. Target was at the point of control. The next target was at the volume cliff where they were sold on the other side. How many of you guys are interested in learning how to see these levels? Can you guys give me a yes if you want me to go through markets and show you where the next trades are? Like I really want to teach you how to do this, because at the end of the day, if I can actually teach you how to see this and I can show you what to do, everything else should be coming off your charts, guys. Like I'm telling you right now, VWAPs, averages, momentum indicators, even freaking order flow. Order flow comes after the fact, guys. Order flow is a confirmation tool. It is not a precursor. Order flow has to execute before you can see it. Okay. Well, you know what's great is that everybody learns at different speeds too. So what I'm going to do is we're going to plan some trades and we're going to go and we're going to take a look at them. So let's go in here, take a look. So would you like to look at futures, Forex, or stocks first? Can you guys just give me a round of information? Pam wants futures first. Okay, we got some futures traders, Forex, stocks, got some Forex and stocks. So we'll look at futures first. And then we'll go into some Forex, and then we'll look at Apple. I want to take a look at Apple where this, yeah, look at the trade, man. Like this was coming into the close. I mapped this out, and this is a historical auction. So two things I want to talk about. Very, very important here, guys. Historical profiles versus current profiles. So what I want to do is I want to tell you what the tool that I'm using to do this, okay? And the reason this is super important, and I'll explain this, we'll do it on futures first. This is the Russell, the small cap index futures market. And what we've got here is a Ferrari. And I mean it. It is a Ferrari. It's an indicator that looks at volume profile. You can change the volume auctions. It also looks at market profile. We can turn the market profile off. It also has the flexibility to take the full distributions and auto split the auctions, just like that. That's a 3-year development process that allows us to hone in on splitting the distributions so that we can identify cheap and expensive locations in the auction, okay? So I'm going to merge them first. And one of my favorite things that I like to do, and this is just me as an instructor and the architect of the software who built it, is I like this little feature here. It says ticks per histogram. And the reason is that I'm using either weekly, dailies, or monthly. If I wanted to look at a daily profile, I would turn it to daily and I would hit recalculate. Now I'm going to get an auction for every single day. Now we have a lot of traders that will trade the daily auctions. Personally, for myself, I love the weeklies, and I'll explain, because the weeklies are really, really, really powerful levels. Okay, very powerful. Dailies are also very powerful. But if I were to take an absolute novice and explain to them how to see the cliff, you're going to see the cliff on a weekly way more powerful than a daily because it's bigger volume. And then what I will do is I will come in and I will change this setting. If I change this to say, like, look at this, I can change this up to say 40. I'm going to change the granularity of my auction. I'm going to change the levels so that I can see the cliffs more easily. If I wanted to come down and I wanted to turn it to say 10, you're going to see what's going to happen here. You're not going to be able to see the cliffs as easy. You're going to probably question yourself. You say, well, I don't really understand which is the exact level. So for me, what I really prefer to do is I really like to stack the volume to bigger ticks, because think about this. Institutions are looking at bigger volume areas and non-volume areas, right? So what they're going to do is they're going to want to know where they can do business and where they can't. So let's just kind of talk a little bit about the difference between a historical profile and a current profile. Okay, so let's just do this over here. Historical profiles are here, here, here. That's 3 weeks ago. That's 2 weeks ago. That's last week. And that's this week. Everybody with me? Okay. Now, you will have trades here. You will have trades here. Okay. But this profile is what we call dynamic. And the reason it's called dynamic, the reason it's called dynamic is because it's still moving. This week is still unfolding. So therefore, this volume is going to be moving. Okay. However, this profile here, this profile here, this profile there, those are not moving. They are stuck. They are staying there, which means the volume is queued in. It means anybody that knows how to use a tool like this and leverage the power of the profile will then therefore be able to understand the historical liquidity of the market. Remember, historical structure levels are people's opinions. Historical indicator levels are indicators. But volume and market profile, when you understand the auction, it gives the ability for the auction to do business. So there's a big difference between understanding the auction versus understanding an indicator, because the market can only do business where the market can facilitate trade. If the market can't take trades because there's no liquidity, institutions ain't staying there to do business. You guys get my drift on that? So my job as a professional trader, therefore your job as a professional trader, would be to locate where the big banks are going to want to not stay, meaning they can't do business there, which means price will inevitably have an imbalance in order flow or supply and demand. So what I'm going to do is I'm going to say the first thing I like to do is I always like to plan my historical levels first. Why do you think that is? Why do you think historical levels should be the first thing we do? Can you guys give me an opinion on that? Anybody? Why do you think historical levels? Yeah, exactly, Jack. They don't change. It's locked. They're not moving. Therefore, it's reliable for those levels to be tested, meaning the volume, meaning they're not changing. The volume liquidity is set. It means we can see a fixed picture of what's happening. Okay, so let's go and do this. If I was to look at the Russell right now, let's just do this. There's the new week. Let's say that was Sunday night. You got home from the weekend with your wife or your kids or whatever the case may be, your husband, and you start looking at your charts and you're setting yourself up for the next morning, or maybe you're trading the overnight session. The first thing I'm going to know is if I'm opening here and I'm sitting here and this is where the market opens, my job is then to go up or down to find areas to buy or sell. Okay. So this lesson is on low volume nodes. I could do an entire month of training on every strategy we could do out of this software. In fact, our members area has so many videos that will teach you all the different bells and whistles. Like when you buy a really nice car, the first thing you do is you don't learn how to use all the features in the first week of driving it. You just get to drive it and you get to have fun with it. Okay. My job today is to get you to take the car, get in it, make some substantial income in your first test drive with it, and therefore go and learn the rest of it when you feel like you got time. Okay. So if we're going to go in here and we're going to take a look, I'm going to just map out what I see as trade locations on the Russell. And we'll do this on any market. I want to know where they're going to drop off the cliff and you need a parachute. I'm just going to draw lines that I see. How many of you guys can learn that? I just plotted 4 lines. How many of you guys can learn that? If I can teach you how to see the cliff, that was pretty simple, right? Now, the difference here is that what I like to do is I like to verify, okay, I like to verify if I need to split my auction. So I will auto split, and I will double check to see if I still actually have really, really low volume in those areas after the auction's been split. The reason for that is sometimes it gets a little confusing. I'll give you an example. This to me is a very clear volume level. The market came here, no volume. Boom, 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 drop. That's high volume. Okay. It's very clear that that's a low volume pocket. Here, the market came back, drop, drop, cliff of volume. I will take that trade any day of the week. I will take this trade any day of the week. Down here, here's the thing. This is why I like to split the auction. It's not a huge cliff, but if we drop the volume out here, okay, this cliff here happens there and it drops. It's not as big a cliff as this one. That's a bigger cliff. That would be maybe going with half size. Not sure yet. Okay, these are things that I talk about in our classroom, and this is what Gilbert and some of our other instructors talk about. Is we talk about which is an A+ trade, which is an A trade, which is a B+ trade, right? I want big cliffs. Okay, so let's take a look at these ones right here. See how this one's a D auction? And when we split the auction, it got real choppy in here. I won't touch that trade. It's not a cliff of volume. So let's just pull that level. I don't want to put my money behind that. Down here. Point of control drops to a cliff of volume. That is not only a high volume node, it's a high volume cliff. These trades, or where you go to the banker and you say, can you give me 3-to-1? I'm going to buy a building. I don't want to buy a house, right? That's the ones you really, really love, because those are the ones that are just, wow. Okay, look at this cliff. Market popped up, drop of volume, splice down. Why is that important? We've never come back to test that area. Now that's a little further down in price, but I'm just telling you what I'd be looking at here. So then we come up. Let's go and merge these auctions. Now let's kind of talk a little bit about how this current week is trading. So I'm going to delete this and this. So this was the week on the Russell. The week opened on Sunday. It traded up. It traded up. What do you see here? I'm just going to stop right here for a second, okay? Remember, this volume, the market transacted here, it created that volume in here, okay? So let me just draw a little line. Where's the cliff here? Let's just draw this out. Where is the cliff? 2260, Lawrence says, 2260. Where's the cliff, guys? You tell me. Where do you think the level should be? 2260? Okay, I'm going to take 50% credit on that because I said the number. 2250. Okay, there's another cliff here. Absolutely. There's another cliff here. Absolutely. My strategy, the way I like to do this, and this is just the way I like to do this, is I like to come in here. Some traders will put the level right here, and they'll get filled to the tick, but sometimes they'll miss the trade. Remember, the market needs to be able to do business to be able to execute trades. Sometimes the market will come down here and it doesn't trade through. It just goes and and then everyone feels like, Wolverine off the X-Men, like he's a superhero, right? Like, I want to get filled. I don't want to miss the trade. So I would put my level here. I'll put my level here. Okay. Let's watch how the market responds to these levels. Market comes down, markets comes down, big sell-off yesterday. Holy frig, man. Okay, there it is. Now, this is not about calling the tops or bottoms. It's about understanding why could the market not go lower. It has nothing to do with Sean's great at calling trades. It has nothing to do with me trying to impress you. It has everything to do with me trying to help you understand that as an institution, there's two things that are going to happen right here. They're going to reject quickly like a bat out of hell, or they're going to tank through here so fast that you're going to the bottom of the ocean with no parachute off that cliff. And you know what? I'd rather take the trade because, you know, at the end of the day, if it's right quick. And if it's wrong, I don't got to sit there and mess around with it. Because low volume are going to create what we call a rejection or a pass through. And almost always, if your level is accurate, they're going to give you the rejection on the first test. The next time they're going to blow right through it. Never trade it. Never touch it to save your, think about this, your kid's life's on the line. You're not going to throw your kid in the fire. Do not throw your bank account in the fire. Okay. So great question. John saying, where would you, Tao saying, where would you place your stop? There's two things that I like to do for stop placement. I like to look at the next high volume node, or I use average true range. Okay. Now there's an indicator on our website, which I'll talk about. It's called the stop finder. Okay. The stop finder. Okay. Write this down. I want you to do me a favor. Grab a notepad right now. Everybody go on everybody go on their desk right now, and I want you to write down stop finder. Let's just write it together. New note. All right, need a new note. We're gonna just write this down. Stop finder for ATR. We're gonna talk about that here in a moment. Okay, just remember I said that. Okay, high volume. In this situation, remember what I said. If you're getting in with low volume, you're getting out with high volume. So if I'm getting in here, we'll talk about the target first. Target's here, okay? High volume node. However, where should the stop be? Well, if they're going to come in, they might overtrade through into low volume and reject in the low volume. So I want to be on the other side of this high volume node. Okay, now if you're not capitalized to trade a full size E-mini, you trade the micro, same thing. Okay, so then you come in here and you draw your little risk reward, take the trade. There's your stop loss. You're almost at 3-to-1 on that trade. Okay, it's a 3-to-1 risk reward ratio almost. 2-to-1 at least if you're getting out front run on the point of control. But that trade's done. It's done. It's over. Let's take a look at the next one. Let's wait for the market, come back down, wait for it. What did they do today? Holy frig, man. I don't call this stuff. I just show you where the levels are, because that's my job as an instructor in a trading school and a software designer. We designed tools that can help you call really freaking great trades. Now, this is on the current auction. Okay. And I personally would want to trade in the direction of the trend. So even if they sold off here, I would take that and I would take that until I had a new profile down here. If I had an auction shifting down, meaning see how this is one auction here, this is shifting up, that means the balance is still to the upside. The balance of the market is still to the upside, which means institutions still view the market balance up here. This is cheap. Remember what we said. This is expensive. Anything below the value area lows are cheap. That was a cheap trade. Let's talk a little bit about targets on the second level. To me, if I don't have a high volume node down here until like way down here, well, that doesn't make sense for me to use high volume now, does it? So the two things that I do for targets and stops, okay? So stop loss option 1 equals volume. Stop loss option 2 equals average true range, okay? So what I'm going to do is I'm going to put an indicator on my chart, and we'll talk a little bit about this in a second. Okay. There's an indicator that we have, and it's part of our tool set. So we're going to go in here. It's called the stop finder. Okay. And the reason I use the stop finder is because it tells me the volatility at that time. Okay. It'll tell me the volatility of the market at that time. The volatility of the market right now, based off the 30-minute chart, the current stop is 125. Slightly above the average. This is the maximum stop loss. This is the minimum stop loss. This is the average. The yellow is the current market. So what I like to do is I like to take a look at the market. I say, okay, well, there's the next high volume node down here. And which one is less? Is the high volume node less than 125? So let's go to 125 right there, 125. Okay, let me draw the high volume node. The high volume node is way the freak down here. So to me, I would not use this as my stop. I would use the volatility of the market as my stop. It's the only two things you ever need to learn: volume-based stop placement or volatility-based stop placement, because anything outside of that doesn't matter. And you're already at almost 3 to 1. You know what I'm saying? How many of you guys see what I'm doing here? Let's take a look at a different market. Let's go take a look at Apple. This is why I liked the Apple trade so bloody much coming into the close today, because this is what, let's go here. This was this week. Okay, there it is, boom. So there's February 8th. February 8th happened on the Monday, right? So this is Monday over here, right? I want to ask a question. There's a volume cliff here, but it's really not low volume, is it? It goes cliff of volume into high volume still. Where's the cliff? Right here. Because it just drops off like a slide. So here's the thing. Okay. Let's talk a little bit about this. I would not be trading in the noise. I don't trade in there. I would be trading down here. At the very least, that's the first cliff. The second cliff is down here. But here's the reason I like this so much is because it was a historical profile. So as I'm trading, the market comes down, it comes down, boom, boom, boom. Okay, here is the first test of the cliff. They did come in to test the cliff right here. You see that? It did give a reaction. You could have had a trade on Apple stock. Okay, so let's take a look at this. Historical auction, boom, boom, boom. That would have been a profitable trade had we put a low volume cliff there. It would have come in, tagged it. You would have been able to put profits on that trade. If I'm coming down here, that's the historical cliff right here. Take a look what happened today coming into the close. There's the entry. There it is. They came in to test it and rocking and rolling. So if I'm asking myself, where's my stop placement here? First, I want to say, well, where's high volume? I want to know where my reward is. I want to know, okay, there's my first target. There's the second target. There's the third target. Why? Those are high volume walls of volume. That's where the market's going to execute liquidity. Okay. So now what we're going to do is we're going to say, well, where do I place my stop? I know my entry is on the low volume cliff. Where is my stop placement? Well, I don't have high volume down here to use. So then what I would do is I would use my stop finder indicator. And don't worry, guys, anybody that's using the macro profiles tool set will have access to the stop finder. So we'll explain how you get the tools and all that stuff, because I really think it's very powerful to have both to your advantage. Okay, so let's just go down here and find the stop finder. So the current stop is 57. The average stop is 108. I would always go a little bit more than the current stop. So what I can do is I'll just draw my risk and reward tool. 57 is here. We just put it at like 60 cents, 60 bucks. Now, like I said, you could trade options on that or whatever you want to do. You can trade stocks, options. Okay, but there it is. So we're already at 2.5 to 1 on the first target. You understand what I'm saying with this? Like, this is the whole point of me looking at the weekly volume, is because this was a historical trade. This was a historical auction trade. You would have had to wait a day or so for it, but it's an amazing trade. And it just happened just now. Like, I have never traded Apple in my life. I just wanted to show you that it doesn't matter what market. Let's go to Forex. What happened on the euro dollar just now? This is why I love historical auctions. Current auctions are amazing, but if you got a whole basket of markets you like to trade, or you want to look at whatever trade you want, okay, I want to talk a little bit about Okay, let's just take a look here for a second, okay? Let's take a look here. I'm looking at historical auction levels, okay? Look it up here, okay? This opened right here. So this is a great example of the market opened here, but it already got tested on the wall here. This wall was already tested right on the open. It dropped right off the open. Therefore, we won't trade here anymore. We won't trade there. The next trade to me, from a cliff perspective, there's two cliffs of volume here, okay? There's two cliffs of volume. Actually, you know what? There isn't. There's one cliff of volume. I'm going to explain it. This is not a cliff. This is what'll trick traders. That's the point of control for volume. It stair steps down, stair steps down. That is technically the cliff right here. So we'll draw a little line in the sand. We'll see what happened here. I'm not sure if it was a stop out or if it was a real trade. We'll take a look. Let's just draw a little line again now. Where's the next one? Cliff of volume happened here, but here's the thing. This cliff of volume ties right in to high volume. So my preference on this would be to not take this, and I would take this cliff here or this cliff here, because this was a set of the new volume. And this is stuff you'll learn in our classroom. We'll teach it to you and we'll talk about that, okay? So I'm gonna draw a little line up here and that would be my trade right there. So let's take a look here. Let's see the market. This one ended up becoming a stop out here, guys. This one actually was a stop on the euro, okay? And then this one came up. Take a look at that. That was the trade. It came right up to the tick. So depending on how if you had it here or here, and this would have been, if you're setting the ticks per histo maybe to 30, a little bit bigger. I like to have bigger volume levels. Yeah, right in here. Came right up. Came within one tick of the level. Okay. Give me another market, guys. I'm yours all day. You tell me a market, I'll find you a trade. Gold. Fantastic. Great market. Let's go find gold. Let's go find GC. Yeah, baby. So let's talk a little bit about the cliff of volume here coming in off of the open. You can clearly see the cliff, right? Like that's the cliff here. Like I love the big drops. I don't play in this garbage. I'll take this one, but we opened here, so we're already above it. So if I'm coming up this way, coming up this way, I want to know where the cliff is, where nobody can drive the bus, right? So what I'll do is I'll just draw a little line here. Just draw a little line like this. Okay, and then we'll continue to go up a little bit. Where's the next cliff? Well, this is a question a lot of traders always ask me. Is this the cliff or this one? Truthfully, it's a pretty freaking big drop right here, guys. Really, really big drop right there. So it's a question of, risk management. If you want to take that there, or you could take it here, one or the other. Okay. Those are the two resistance cliffs that I see. So this one hit. Okay, this one came in here. And so if this came in here, I want you to take a look at this. This came into this pocket right here. When it does this, and it comes within like a tick of my level, it depends on if you had the level here, if you had the level here. It's really a question on just fills. But, some traders will do this. It really depends on how big you set the ticks per histo. I personally will try to be closer like to the edge if I'm using really thick histograms, just mainly because I want to be able to have like you can see here, like as a gold trader, like I don't know, as a day trader, they kind of overshot a bit and then it flushed through, right? So that depends on how you would have managed that trade. The next bigger trade is up above here, and we haven't even got there yet. But you can see the market could not get through this level. Like it was a very, very big level of volume. If I was to look at the trade yesterday or 2 days ago, like I was looking at this trade here. I was actually looking at this trade here. I missed the fill on this trade by one tick. I had an order in here. I had an order here actually. And if I would have had it in the middle of volume, this would have been the cliff. The cliff was here and then dropped out and then came back down. Now, this is a very, very thick setting for gold. Gold's a thin market. I would probably bring it down to like 20. Okay. You can see the cliff. Cliff was right here. So if I'm looking at this cliff of volume from a support perspective, right, that was the low. That's the midpoint. You would have been filled yesterday on that trade. I think it was yesterday, the day before. Okay, the next cliff is down here. We're there now. We're there now. So let's just do it. Where's the high volume node? Not interested in that big of a stop on gold. So what are we going to do? Use the stop finder. Risk reward, stop finders. I would probably go with a 50 ticker. Right? So you'd still be in this trade. You'd still be in that trade. Right? So that's a pretty solid environment. Now, the thing about the gold market, and just explain this, is where is the balance compared to last week? So if you think about the auction, this is the profile here, okay? But it's inside last week's auction. So what ends up happening is the market can be traded from the short side or the long side. Normally, I like to have a bias. I like to have and I'll normally look at the distribution of the auction, like as the primary, right? And when they're sitting on, like, the range has been inside, it's been inside, then you could trade both sides of the auction. You could trade long and short because they're going to keep it on both sides of the range, right? If we were in an uptrend, like if we look at, the euro, or we look at any market, give me another market, right? Like any market. You want to look at crude oil, look at crude oil. Crude oil is shifting up. Crude oil is shifting up. Yeah, David's asking the risk reward tool. That's our own version of it. Yeah, the Ninja has their own here, and we made our own with multiple targets. Okay. So if I'm looking at the current week, okay, right here, and I'm looking at, where is my levels coming in off the week? If they want to keep trading it, there's a wall, there's a wall, there's a wall. 3 sexy trades. If crude can get down there, I will take those trades. And then as soon as they traded up right here, as soon as they lifted up right here, do you see what happened? On that uptrend right here, I'm going to show you what we could have done. And we actually did this because I traded it this week. Where was the wall of volume? Where do you see the wall of volume here, guys? Let's turn this down just a little bit. 15 ticks. Right there. You can see it at 57.60. 750, 760. So let's just draw a little line in the sand. Right there. Okay. You can see it. And if you really want to get down, you depending on if you enter here or if you enter down there, right? You can see that. Okay. So did you guys find that? Did you learn something from that? Like, let me explain something. This is an emerge view. You can auto split the auctions. Okay. You can auto split these auctions so you can see where the volume is. Okay. The main thing here is understanding the power of the macro profiles to be able to do this, because what I normally do in our trading room, or what Gilbert does and I do, what we do is we will always start on a merge view. A lot of times we will look at the big cliffs, okay, and then ultimately you can then split the auctions. There is no software out there that splits the auctions like this. Like, we auto split the auctions because it's part of our proprietary splitting algorithms, right? So we can split the auctions on any of these markets. If I want to split the auction right now on the euro, okay, you see the euro did end up hitting that level. You can see that here. The euro hit that level right here. Wow, they came up and hit it massively today. Okay, if we want to split the auctions, we hit auto split. It's going to bring these into balance. You're going to see that now. See, to me, this is where I personally would leave it on the merge view, because I need to be able to see the cliff. And when you split the auctions, sometimes you don't always get a good read of the cliff. But this is arbitrage. And we're going to get into arbitrage in a different lesson. You'll learn that in the members area, okay? Because there's an arbitrage level from here to here that, there's also arbitrage here to here between the value areas. But I don't want to disregard I don't want to overload the conversations, guys. I just want to keep it very simple. Today's lesson is on low volume cliffs so that you guys can make money driving the Ferrari right out the gates. Okay. So what I want to do, guys, I want to talk about drawing your levels. Always start at your historicals and then do the current week. or the current day or the current month, right? You could literally do this on a monthly auction as well. If I wanted to put this on monthlies, big profiles. These are really big auctions, okay? And you can see from the monthly perspective, right? If we were looking at it from the month, and I just would like this, let's go like a little bit like that. And there's the new month right there. If I was looking at it like this, and I'm sitting in the, I would look at where are the cliffs on both sides of the auction, and I'll draw them. You got, this is a cliff. That's a cliff. We're sitting inside this noise. So I would take that as a cliff and that as a cliff. And I would look at, you know, the market kind of responds in these areas. Like this would have been a stop out. Okay, this would have been a stop out on the euro. Okay, but it came in retested on the other side of it. Okay, and so it really depends on, you know, if you want to use monthly. I always stick on weeklies myself. That's my preference. And the reason for that is it allows me the opportunity to be able to get a more accurate read of intraday volume without going too far out in time. Okay. And it really depends if you want to look at stocks, like you give me any stock you want and I'll be able to draw the auction. I'll show you where the low volume cliffs are. Okay. So give me a yes. You found that, you like that, you learn from it. Okay. So let me ask you this. Okay. We're gonna, so if we show you where the trades are, can you plan them? Can you set your levels on the chart? Anybody here think you could do that? If we showed you where they are, could you easily just identify them? Give me a yes or no. Okay. Okay. And after you know where they are, can you identify a volume node versus ATR? You think you can learn that, those three things? Okay. So let me show you this to help you out a little bit. Okay. When you're a member with us, futures trading. Okay. We're just going to go up here. When you're a member with us, we're going to post our levels. We're going to post the levels in here. We're going to post them for you. We're going to draw them here. You're going to see them. You're not going to be confused on them, where they are. We're going to show you where they are. Okay. Traders posting their performance on the levels and all that fun stuff. Okay. Look at this. Live trading with Sean. Sean took the CL trade for a nice long win. This was, look at the low volume cliff right here. See it? Take a look at this one. This was me trading it. I traded that level. That was the low volume cliff. Right? What I'm showing you is what we do. Okay. All you need to do is learn how. And here's, I said, look at, miss the GC long, FML. You guys can do the math. You know what that stands for, FML. Had I have done what I showed you here today and put the level right in the middle of the cliff, I would have probably got the fill. Maybe not. Either way, I had my whole plan mapped out on the low volume node, cliff right here, and I missed it by a tick or two, you know, but it shows you why we're doing it. Okay. It shows you why we're doing it. Okay, let's go back here, show you some other trades. This is why, okay, levels, low volume nodes. Here's Lisa. Lisa says, I got the low volume node. Look, Lisa nailed it. Low volume nodes off the auction. Now that she split the auction and she's looking at the S&P on very big nodes. You're awesome, Lisa. There was a good low volume node trade on the Russell as well. Big drop this morning. Hit the node. Look at the levels. So these are what we're doing here. Got that one too, she said. I'm just showing you what our users are doing. Okay. Excuse me. This is Gilbert posting his trades today. Okay. So when you come in and you use the tool, you'll have access to that thread. You'll be able to communicate with other traders. You're not going to sit there trying to figure it out on your own. You could post your pictures, say, hey guys, is my level in the right place? And you know what's going to happen? Everyone's going to say yes or no. That's a powerful concept, guys, to have a team of people willing to help you and saying yes or no before you, and you practice in sim before you go live. So what I want to do is I want to bring back Mr. Vito Corleone. I told you I'd be back, right? I don't know about you, but I love the Godfather series, okay? I want to amaze you with an offer, okay? Are you guys open to hear it? Give me a yes. You guys are open to hear the amazing offer. Okay. It's important. If not, hey, I got thick skin. But here's what I'm going to do, guys. Okay. NeuroStreet has 3 plans. Okay. I want to talk about these plans. This is completely new. It's the new era of NSTA. And what we have is we have a bronze, a silver, and a gold package. Okay. The auctions are only involved in the gold package. Okay. Bronze are for complete newbies that have never taken a course on anything before, and they get the intro courses and they get the cognition training and the downloads, and you get access to Discord. Okay. The silver is for traders that may not be using the software, and they are just in, say, some of our stock trading rooms, because we have a stock trading room that runs with scanners and not everybody's using auction software. So the silver would be a package who you weren't using our indicators. You just were in our trading rooms and you're looking at taking our trading rooms 5 days a week, education courses, etc., on strategies. But if you're going to use the auctions and you want to use the auctions, okay, and you want to take advantage of this, let me explain what's going to happen. There's a major difference between the silver and the gold package. The difference is you get the profile software. Okay. You get the profile software. So today's was on the macro profiles. Okay. Let me just explain this. The macro profiles. But we are one of the largest software vendors in the industry. We've got over 40 indicators on NinjaTrader, TradeStation, and TradingView. So you get the macro, plus you get the stop finder, plus you get the supply and demand indicators and our order flow software and our frequency software and every other indicator that our company sells. You get all of it when you're in the gold package. That's over $35,000 worth of indicators. We don't separate them. It's an all-inclusive bundle. NeuroStreet now provides an all-inclusive opportunity for you to have it all or none environment. Plus, you get access to all of our trade rooms. When you buy the gold, you get all of our trade rooms. So you can come into our trade rooms. There's no separate purchases. It's when you take the tools, that's the whole, no, we don't sell them anymore. We have monthly subscriptions. You get access to all or none. Yeah. So when you use the software, you get access to our trade rooms and our membership courses and everything. So let me explain this. Okay. Instead of buying indicators for $1,000, okay, and therefore what ends up happening is you get access to all of our software, all of our strategy courses, all of our indicators, all of our trading rooms, all of our Discord threads, everything you want to use. Okay. And instead of buying software outright and thousands of dollars for each indicator, you get it all. Okay. So normally you would be paying a whole lot of money. Some of you may not want all the tools. Some of you may want to use all of them, but I'm going to assure you this, that you can get it in for a monthly or an annually. No, it's an annual you can get it for a much cheaper price. Yeah. No. And so ultimately monthly, it's $290 a month. Okay. If you're doing it annually, if you're doing it for a monthly purchase, it's $349 a month. That's 5 trade rooms. That's the macro profile software and 39 other indicators worth $35,000 retail value. So if you want to use the auction software and you take one winning trade a week, can you take a $350 trade a week and pay for the subscription and get all your stuff for free? I'd like to think so. We can teach you how to do it. Heck, we'll call the trades out in the morning. We'll post them in the Discord chat room, and you can get the levels pretty much spoon-fed to you. You just need to come in and learn it. Okay? Now, let me kind of put things into perspective for you. Everything's all-inclusive with NeuroStreet. We are now the best priced, best valued, most resourceful company in the industry. There is no other software vendor in the industry that can do what we do from a price perspective. At the end of the day, price is the most dictator, guys. Everybody wants a deal. Okay? If you go to any other software vendor, you're either buying one product or you're subscribing to one indicator at a time. Now you get 40 for the price of one. Okay, it's a no-brainer. Plus, then you have to normally get trade rooms and subscribe to those systems and buy their packages. No, you get access to all of it. You just need to get into the gold package. And what's really nice about this is that we have a love us or leave us policy. Okay. If you don't like us after 1 month, you're under no contract, no commitment, no obligation. It's a risk-free environment. At the very least, we could spoon feed you trades for 4 weeks, show you all the winning levels that our students are taking on a regular basis. You can either take them or not, but at the end of the month, if you don't like the 40 indicators and the macro and the trade rooms and all the membership site, you just hit cancel. And it's a win-win for everyone. Right? It's a huge value add for you guys, and it's super cost efficient. It's super reliable. Plus, we do all the heavy lifting. So what you're going to get under the gold package, okay? You get access to all the intro courses. So even if you want to trade futures, but you don't know anything about Forex or options or crypto, you got access to all those training videos too. We'll give you a month. You'll get the cognition training for your brain. All of our Discord trade rooms are open to you. You get 5 days a week in your trading room. So you can come into our trade rooms and watch our levels, trade the levels. Plus, you get access to the stocks and options trade room as a part of it. It's not even part of today's discussion. Okay. All the educational courses, the strategy courses, the templates. Plus, here's the thing, guys. We have over 40 indicators on our website. Okay. We're the largest indicator vendor in the industry. You get access to all of them just by subscribing to use the macro today. So if you want to make money using the macro and then test out all the other software, go at it, have fun. Okay. So what I'm going to do is I'm going to put a link in the chat box here for you guys. Okay. And then, okay, there it is. What I'm going to do here, guys, you will need the gold package if you're going to use the macro profile software. And tomorrow, okay, and excuse me, this week and next week, and for the next 4 weeks, every morning, you're going to get into our Discord chat room and you're going to come in here and we're going to post our levels pre-market and we're going to show you where those levels are. And all you need to do is come in and take those trades if you choose to, right? If it's up to you if you want to take them or not. We're not giving you investment advice, but we're going to show you what we're doing and where our traders are taking those trades. Okay. And that way you can plan efficiently. If you want to trade futures or Forex, if you want to trade stocks, cryptos, whatever the case may be, you can. Okay. But all you got to do is get into the gold package. If you decide that this is a really good thing, you've been looking for this and you want to go on the annual, you save 2 months for free. And it is a bit more of a price tag, but it is an annual subscription. And then therefore you get access to the entire trade rooms for 5 days a week for the entire year, all of our software, right? Everything that you need. And if you're interested in what the other tools are, like if you want to know what the other indicators are, just so a lot of you guys are wondering about the stop finder and some of the other tools and all that stuff. Let me just show you on our website where all of our software is located so you guys can see what it is. Okay, because I know a lot of traders have questions on, what other indicators come with the gold and what's involved with it. So if you go under Learn to Trade and you go under Trading Indicators, I'm just going to show you this. So you go down here. These are all of our, wrong one, trading indicators and software. Everything is packaged in our packages. So there's no independent sales. Like you're not going to buy one indicator. So here's the macro profiles. I just did the event today on the macro. But if you want to use supply and demand, order flow, all of our other software, our easy algo execution platforms, anything, it all comes with your gold. So you get all of this too, guys. That's what I'm trying to explain here is that if you were to buy these normally, you're paying $1,000 a license. Okay. Now you're paying $349 a month to have access to all of it. And if you don't like it, you don't stay on. And if you love it, you stay in and make money with us on a daily basis. It's your call. Okay. I'd like to think it's a pretty good win-win. Okay. So I'm going to open it up to Q&A, guys. Does anybody have any questions? Can you guys type in the chat box? I'm going to, yeah. So basically John's saying, so basically we rent them on a monthly basis, right? Yeah, it's a subscription program. Yeah. So, but you get, that's the trade rooms, that's the software, that's all of the Discord chat rooms. So you get access to the levels placement, you get everything as part of your subscription. So if you can take a trade or two a month and covers the cost of your subscription, it's like a, trade for free scenario. And JH says, does the software show? Yeah, so just so you understand, JH, if you're looking at a 60-minute chart or a daily chart or a 4-hour chart, the cliffs will be the same because the auction reads the auction. The time frame does not matter. So that's the difference between what a lot of people don't understand is that you know, most traders, let's go back here and take a look at this. So let's say I want to look at, so let's say I wanted to look at this on a 240 minute. It's the same thing. The auction's the same thing. The auction doesn't change. The chart will change. The auction never changes because it's driven by market profile. So you could put this on a 720 chart, and it'll still look the same because auction off market profile and volume profile does not dependent on the bar time frame. It's dependent on the liquidity and the market profile of the TPO counts on the 30-minute charts. So this is the difference. Okay, this is the difference. So it doesn't matter if you're looking at the 30-minute, you're looking at the 240, the levels will always be the same, just a little bit more condensed. Okay. So Larry's saying, how much is the subscription? Let me go back here and explain it. It's $349 a month. And that's 5 trade rooms. Let me show you exactly what comes with it. That's all of this. You get 5 trade days of trading rooms. You get access to all of our education courses, our strategy courses that teach you all the levels placement for not just this, but for everything that we do, guys. We are an academy, so I can assure you that you're gonna never want to leave. I can tell you that. You know, and I say that very honestly. There's so much in there that you'll benefit from. It's a no-brainer, but you have to get in there to just kind of get your bearings. All the workspaces and the templates are there for you guys as well. What's really nice is that the trade rooms come with it, and you get access to the software. Plus, you get access to Discord, so that you're in the community where you can actually be talking to the other traders, trading the levels. If you want to use the other software and you have questions on the other stuff that we didn't even talk about today, it's a huge win. Okay, so yes, I do, John. Yeah, well, actually, I ran the futures and forex auction room for like better part of 5 years, 3 to 5 years, and now I've got Gilbert in there, and you know he comes in there and he's amazing. Like Gilbert's crushing the market, I can tell you that. And I run the stocks and options room, but I come in from time to time, and I share the mic with Gilbert as well. Yeah, so you'll have access to all of us. Yeah, and anytime you want to message us in Discord, we're just a message away. Yeah. I can assure you this, guys. What's really important here is that there's no risk to you. If after 1 month we have not impressed you, then please let us know, because I can assure you this, we'll die trying. Okay. So let me ask you a question, guys. I'm going to run a quick poll in here. A quick poll here, because I just want to make sure I let my team know here for a second. Give me 1 second. I'm just bold like this. I'm really bold like this because I take it very quite seriously. Like, I got traders that trade lots of money, and I really think that it's important that if you really want to make good coin, you got to be in an environment where they can show you how to do it. And all I care about is making sure that you guys take winning trades. Okay. All I care about is helping you guys get consistently good at this. Okay. So let me just, I'm just going to run a poll here, guys. Just do me a favor and just let me know. Let me know where you're at, so I can let my team know if you're gonna move forward with this or not, so we can help you guys get set up and get you on the levels, get you in the classrooms, get you registered, get you into the Discord, get you understanding what's happening. And I'm gonna post the links again here as well, guys. So I'll leave it over to questions now. If you guys have questions, please let me know. Yeah, Gary's like, I'm already a member. Perfect. Please put in your questions here, guys. Let us know. David's like, I'm already a member. Yeah, no, I know a lot of, like I said, we got a lot of familiar names in here, right? We got a familiar, Bob's here, got Bob, Carlos, David, Gary, Jeff, Gilbert. Best decision I ever made, yeah. Larry says, can you go from gold to silver? You can, yeah, you can go from silver to gold if you want, but you can go back to silver if you want. Yeah, absolutely. Absolutely. Hey, not a problem, Sammy. Thank you. Yeah, glad you learned something. Okay, perfect. Pam says, I'm a new member this week. Thank you. Very impressed. Hey, no problem, Pam. Yeah. So Larry says, great. You're very flexible. Yeah, not a problem. Yeah, we're here to help, guys. Like at the end of the day, like you guys can go do your due diligence all you want and watch YouTube videos. I'm very bold about this. I've been in this business a long time, right? Like I'm not here to impress you. If you don't come into a month and see a whole kick-ass lots of trades, we've done something wrong, right? Like if you want to go and try to figure out who's what and what and stay by yourself, like I'm very bold about this, right? Because at the end of the day, we're an academy. We're not just traders. Like we run multiple trading rooms, multiple systems. We don't just trade one strategy, right? Like we run 50 webinars a year on 50 different topics. Like we're not just trying to sell you one system. We're here to demonstrate multiple ways of doing great things. So, and I really don't care if you think I'm a great trader. I would rather my students speak for themselves. So if you want to talk to students and how well they're succeeding, it's more important than how good my instructors trade, because you're not paying for us to come in and wow you on how good we are. If you're not able to do it, right, then what's the point? Can we agree that that's more important? You guys getting good versus us showing how good we are? I'd like to think so. And traders post their performance all the time, but we've got other groups in here like mastermind groups, and we've got traders that post levels. Like these are all of our levels placements, right? Like, and so like we post our stock performance and our trades in our stock program, and like I mean, like we're not sitting here just talking about one topic. Today's webinar is on macro profiles. So, yeah. Yeah, so Thomas, I'm an academy owner, so my entire focus has been building algorithms for bank platforms and an educator. So we don't trade live accounts. So if you're sitting here trying to learn if I trade live accounts, no, we're an academy. So if that's a deal breaker for you, then we can't help you. Yeah, we trade in sim in the trade room. Our entire focus is helping traders trade in sim, get good first. If you don't see the value in that, then hey, we're not the right place for you. Yeah, we've been doing that for 6 years. We're one of the largest schools in the industry. Yeah. Yeah, and we're very open about that, and we don't hide from that. We'd rather trade in sim and teach you how to become consistently profitable first, because us impressing you with our results is not the answer. You need to be able to see other people doing it, masses doing it, not just one person. Power by numbers. We have way lots of successful traders, and if you want to speak to them, I can give you a list. So you can reach out to them. Not a problem. Just shoot an email to me, Michael or Thomas, and I'll send you a list of very happy, successful traders. Is that good? Perfect. All right, guys. So let's do this here, guys. If you have any questions, let us know. That's the packages. I'm going to put that in there for you guys one last time. Yeah, absolutely, Larry. Yep. Yeah, absolutely. We'll send you a recording for sure. Excellent. If you guys have any questions, shoot us an email. The email is there, support@nstradingacademy.com. And I look forward to having you guys in the classrooms. Tomorrow morning, I'll be running our stocks and options room. But come after the holiday, we'll be running the futures and forex room on Tuesday. Monday's a holiday, so obviously we won't be having that open. So if you have any questions, guys, let us know. Hope you guys enjoyed the event. Hopefully I did a good job at showing you how to place the levels and where all the trades were and stuff, and showing you trader success and stuff like that. I think it's really the most important part. If you need any assistance with the auctions, let us know. And we look forward to trading with you guys. Yeah, have a great day. Hope you enjoyed the event. Hey, not a problem, Daniel. Yeah. Not a problem, Pam. Thank you. Yeah. Thanks for being here, guys. Hey, no problem, John. Yeah. Enjoy your evening.